Well, to get a more in-depth view of how the market is trading right now, I'm joined by Kyle Burgess, who is a portfolio manager at Nedbank Private Wealth. Kyle, thanks so much for your time. So we are seeing a very much a subdued reaction on global markets to this shock UK election vote, but not so much here if we take a look at the individual stocks that have reacted to that. South African companies with big UK exposure there, Brait, really finding these results hard to digest.
Yeah, so I mean, the story I think of the year has been currency moves that have been moving markets, and you know, I don't think this week's any different. You had announcements out of the ECB. You've got the UK election yesterday that moved the pound significantly weaker against the rand. Sorry, so we should be seeing some big moves on the markets. But you know, also to top the week off, we've got Moody's that are going to be at the close of the market, or this evening, going to be basically deciding if we're getting downgraded or not. So I think that there's a lot of news happening on the markets from an economic front. Not much happening from a corporate side, so I think guys just biding their time today. And you know, if you have a look at the all share, it's only up marginally, I think 0.19% you mentioned earlier. So underneath that, there's quite a bit happening. I think you're seeing banks and retailers being sold off a little bit today in expectation that there will be a downgrade. And you know, again, you must look at the week growth numbers that were published on Tuesday or Wednesday earlier this week. You know, it doesn't point to any positive signs from that. You know, we also had very weak manufacturing numbers yesterday, which isn't great. So it doesn't bode well for us this evening. So I think, you know, importantly, we must just look out for whether we're going to be on a sort of a negative outlook or if that's going to be a stable outlook. I think that's quite important, because at the moment I think the consensus is that we will be downgraded to junk status. And you know, again, it's just important to see if we have a negative outlook or stable outlook. So
uncertainty here, uncertainty there in the UK, and definitely the likes of your Brait, rather, you've got Into, Hammerson and Old Mutual, Netcare, really taking that uncertainty negatively. How are you looking at South African companies there in the UK in terms of the risk premium? Has that increased? I was speaking to Michael Treherne of Vestact earlier, and he said that definitely it has, because now that economy is facing even more uncertainty with regards to how Brexit will unfold.
Yeah, absolutely. I mean, you know, you've got Brexit negotiations coming up, which already puts quite a lot of uncertainty into the picture. You know, and then on top of this, 7 weeks ago, I don't think Theresa May thought that a snap election would have this outcome. You know, essentially, she did it to strengthen her hand and to have basically a stronger sort of arm in Brexit negotiations, and that's backfired quite significantly. So she's now in a situation where she's going to basically have to rule through a hung parliament. So essentially, not one party is going to have majority rule, which is going to make things very, very difficult for her. And you know, I think that it's not going to be easy for her going forward in terms of Brexit negotiations. So is there an increased risk premium? Absolutely, I certainly think so. And you know, if you look at guys like Brait, who we've invested in, you know, it's a stock that has looked reasonably attractive in the past at these levels. You know, and then the underlying stocks that aren't, the underlying holdings that aren't doing so well in the UK, you know, it isn't fantastic. It doesn't bode well for them. But just from a pure currency movement, you know, down 2%. You know, when we got into the office this morning, it was never going to be an easy day on the market for anyone with UK exposure. So you know, I think it's just a time to batten down the hatches. And you know, again, if you look at it from this point of view, if we do get downgraded this evening, you know, possibly could, you know, the rand could possibly blow out over the weekend come Monday. You know, some rand hedges might be looking reasonably attractive, but this is a bit of a short-term movement at the moment. You know, over the last few weeks, we've seen some massive moves in the market, and I suppose you could extrapolate that to the last sort of 6 months. But ultimately, I mean, over the last year, we've really gone nowhere. So it's just it's been a question of currencies moving either sort of your rand hedge stocks, and if they're not performing, you know, you got your retailers and banks that are performing. So you know, I think it just highlights again the importance of a diversified portfolio in this environment.
But how diversified? Because on the whole, right now, should traders or investors be following what is happening on the market right now with this heavy selling of South African companies that are based in the UK? Should they be trimming their exposure of UK stocks at this stage?
Well, I think it's a bit of a difficult one. It's never a great time to be selling shares in the midst of, you know, all of this news. So I think that you'd probably should have taken a position, you know, earlier in the week, or look to take a new position, you know, going forward. I don't think it's always a very smart idea to react to panic on sort of just the idea of reacting to panic. So I'd certainly just kind of wait to see what the outcome is. You know, I think Theresa May is due to give a statement any moment. You know, there's obviously been calls for her resignation, which is not surprising. So we'll see how that plays out. You know, we need to see how Brexit plays out. We need to see how the UK economy reacts to life after the Eurozone. So I think there's just so many sort of balls up in the air at the moment that it's going to be quite difficult to really make decisions based on the back of one sort of vote.
But I imagine if going into those Brexit negotiations now, Theresa May going in with a much weaker hand, if she happened to, or she's unable to get a soft Brexit and we see a hard, complete exit there of that UK economy, then that would be time to reassess your assessment or valuation of the UK companies or South African companies with UK exposure in your portfolio.
Absolutely. I think a hard Brexit or a soft Brexit is really what you need to be looking at, and how the economy will fare. So it's one thing to get that call correct. It's another thing to forecast how that call will affect the UK economy and filter through to the companies that that are owned by the stocks that you hold in South Africa. So it's really not an easy situation that you're in, and there's a lot of information out there that you need to keep abreast of. But I think it's an exciting time to see how this plays out.
And just a quick one, Steinhoff seems to be bucking the trend there, so their share price is a positive. Why? Because they've also got UK exposure through Poundland, right? Yeah,
correct. So I think it was on Wednesday that they announced their results, so 9% revenue growth there, which is, I think if you have a look at it, that's fairly good. They have proved that they've got a fairly resilient sort of a growth model. I think they released, they did have a bit of a dent in revenue just based on extra shares that were issued to finance some acquisitions. But I think on the whole, even if you take that out of it, they still showed fairly good growth. So on the day that they announced their results, there was quite heavy selling, I think down 4.5–5%. The next day there was some, well, Thursday there was a bit more selling. So you might just be seeing a bit of a bounce today on the back of that.
And of course, NEPI also coming out with some merger and acquisition activity there, and it looks like the market has taken that positively. What's your assessment of that deal?
Yeah, so I think the circular going out to shareholders today, they expect Newco, which is essentially Rockcastle and NEPI, the merged company, to be listing and trading on the 11th or 12th of next month. So I think we'll, as a house, be backing a merger like this. I mean, if you have a look at it in terms of their just synergies that would be coming out of the deal, it would be fairly sort of mundane, but I think that financing costs would probably be the biggest one. So just with their larger exposure to Eastern Europe, probably looking at some better financing costs, going forward, which is great.
And Kyle, just a last question as we wrap up. Going back to Moody's, we are expecting that statement in the afternoon. We have seen the rand fairly subdued at these levels, but should they come out with any surprises, will we likely see that currency hit back above that $13 what am I saying? 13 rand to the dollar level.
Yeah, I think we're fairly close to that at the moment, and these days I don't think a 2.5–3–4% move in currencies is that unexpected. It's it does happen fairly often these days, so it'll be something that we're watching quite closely.
Well, thanks so much, Kyle. Have a great weekend. We're going to leave it there. That was, of course, Kyle Burgess, who is a portfolio manager at Nedbank Private Wealth. Now, after the break, we review